morning and welcome everyone to the Money Control live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equities set for a positive start after two consecutive sessions of drop. GIFT Nifty indicates a slightly positive start coming in for Indian equities, sees Nifty above the 21,600 level thereabouts. US market, well, the global handover typically isn't really encouraging. Three major US indices in red ahead of the Fed December meeting minutes. Of course, the Fed minutes showed that inflation was under control, but also suggested that many members now endorse the higher rates for longer narrative, also failed to provide any clues on US rate cuts. While Asian stocks waver as traders ponder over rate cut bets and Chinese stocks remain under pressure with uncertainties about recovery in the world's second biggest economy, keeping investor on the fence. Talk about FII, they've sold shares to an extent of 666 crore and DIIs, they have offloaded equities to an extent of 862 odd crore. What we have in terms of the FNOQs, let's look at the FII in FNOQ setup first. Well, FIIs have been the net sellers in index futures. Along with that, they've also been sellers in Bank Nifty futures. Also been the sellers in index option. There, the amount is a number that you need to watch out for. Also an expiry to weekly expiry. Do bear in mind that fact. They've also been the net sellers in stock futures. Well, what remains in FNO ban is National Aluminium Company. What still remains in ban is Balrampur Chini. Along with that, we also have Delta Corp per se. Hindustan Copper also makes it to the list. Along with that, IEX, SAIL and Z Limited. Option Qs, well, Nifty PCR now is at 0.76 versus 0.92 in the previous session. Market doesn't seem to be breaking down at the moment. It's just a correction. Mid cap still seem to be very strong and have hit a new high yesterday. There can be no correction, can be big unless the advance declines per se. That ratio seems to be falling badly. That's one thing that you need to watch out for. The market is rather giving you a re-entry opportunity. We of course going to be talking to the technical analyst about this. And US market fall is because of the increase in bond yields and dollar. And do bear in mind the fact that Indian rally has never been because of US rate cut hopes. It has been running on its own theme. And do bear in also mind the fact that January is normally a tough series. Momentum will resume soon. But it is a weekly expiry, and let's get going with strategies and levels and top recommendation of the day from Chandan Taparia from Motilal Oswal. Morning there, Chandan.
Good morning. Thanks for having me.
Pleasure is all ours. The levels that you're now looking at, also Nifty IT, is it a make or a break level for Nifty IT also?
Yeah, so we have witnessed some profit booking in last two trading session. Nifty fell to surpass 21,680 and then drifted lower. So 21,680 is going to act as a key hurdle. If that level is surpassed, then again bulls will be roaring in the market. But if it fails to hold 21,680, then again it can drift down to previous day low of 21,500 zone. So 21,680 is going to be a decisive level for the Indian markets. If I talk about the Nifty Bank, then we witnessed some sort of resilience yesterday. When indices were falling down, it was not. So 47,777 is a level. If it manages to hold 47,777, then some bounce will be there towards 48,200 level. Talking about Nifty IT, that is forming some sort of multiple top formations, but supports are visible at 34,400. So if 34,400 is broken, then only there will be decline in the Nifty IT. So 21,680 is going to act as a key level in Nifty. If that is surpassed, then no need to worry for bulls. Otherwise, we need to be with the mixed setup in the market going forward.
All right, Chandan, I'll also want to understand, do you think it is a market, the strategy that remains a buy on dips market per se, after the two consecutive sessions of correction that we've seen? Do you see a positive start coming in for Indian equities after the kind of negative global handover that we've got thus far, completely devoid of what's happening in the globe, at least when it comes to the FOMC minutes, which typically doesn't really provide a flavor on the rate cut scenario per se?
So, Nickey, the trend of Indian market is intact. Setup is positive. We are making high top, high bottom formation. If I ignore the daily chart and go into the weekly, from last 10 consecutive weeks, we are making high rise, high lows. So till the immediate support is not broken, I don't think there is worry. We have multiple support at 21,200 to 21,300, but on immediate basis, a hold about 21,680 can again take the indices to the new high territory. So not much negative, but having the mixed set of cues because of the global indices. And I believe same time that liquidity is supporting well into the Indian market. The SIP flow, which is 18,000 crore monthly. So all these are the reason, and the good part is selective sectors are not performing, but few heavyweights are holding the indices very well.
Chandan, I'm going to come back to you in just a jiffy before I address in the one recommendation that you have for our viewers. In the meanwhile, let me also talk about the JP Morgan report on IT sector. Of course, IT, as I suggested, is expected to be the theme of the day. And there is an upgrade which is coming on Infosys and L&T Tech to overweight by JP Morgan. That's one thing that you need to watch out for. And they've also given a neutral rating for the entire sector. This is, essentially it's come on the back of the kind of correction that we've seen in the entire IT basket yesterday. There were more than 2% cuts thereabouts. But do keep in mind the fact that this is going to be a theme that is expected to play out big, at least in today's trading session, given on the back of upgrades that have finally come for the sector. Chandan, coming back to you, one top recommendation of the day.
So positive on the selective PSU banks, we have positive on the Nifty CPSE. In CPSE, we have positive on the banking, defense, railway. So I'll recommend on Canara Bank. The stock has given a consolidation breakout of last 15-20 days. It managed to hold above 450 zone. Supports are gradually shifting ahead. Yesterday, we have seen surge in volumes with decline in open interest, which clearly indicates that shorts are covering. So 450 is support to drive the move towards 480 zone in Canara Bank.
Okay, Canara Bank is the one that you need to watch out for. Of course, there is also a buyback plan which has come through for Chambar Fertilizers, where the company is going to be considering a buyback proposal on January 8th. That's the one that you need to watch out for, along with Dhampur Sugars, where the board has approved in a buyback of up to 10 lakh shares at rupees 300 per share, worth around 30 odd crore. Geo Financial BlackRock, that's another one. The company has filed in for a mutual fund license with SEBI. There is an in-principle approval in consideration. The companies also have joined in, let's just say as a joint venture, had filed in the application on October 19, 2023. Well, there we go. Markets 0.25% of gains coming in for Nifty 50, showing some amount of resilience amidst the negative global setup that we saw, but also in line with anticipation. Bank Nifty, let's pull that up just to see if there is a fair bit of momentum also coming up for Bank Nifty. Well, it's a positive start for Bank Nifty with gains to an extent of 0.2%. Mid cap and the small cap. Well, mid cap, they've been scaling highs after highs, so that's a theme that still remains interesting despite the bout of skepticism around the street for the correction that is due for the broader counterparts. But Nifty IT, that's pulled that up also. That's the one which is expected to be positive given the kind of upgrades and the neutral rating that has come through after years of, let's just say, difficult time coming in for the entire sector. Now let's look at the Nifty Metal Index too before we move on to the top gainers and top losers of the day. That's the one we need to watch out for. Well, at this point of time, the momentum remains intact. Bajaj Finance, Bajaj Finserv, Tata Motors, these are some of the top gainers that we have. Infosys, Adani Ports and NTPC are the top gainers completely. It's Bajaj Twins right now, which are essentially taking the markets a bit higher. Talk about the top losers. Well, let's see where the momentum is when we talk about the losers. BPCL, Bajaj Auto, DRL. Well, these are the top losers. L&T, HCL Tech and Tata Steel. Another top losers out there, Bajaj Finance per se, that's the one that I need to address. It's the top gainer of the day. The Q2 new loans have inched up by 26% year on year. AUM also has inched up by 35%. And the deposit book is up by 35%. Chandan, come in on this one. Bajaj Finance, Bajaj Twins essentially, that have led the markets higher. What's your take on that? And the immediate support and resistance levels coming on this one. Do you think it's a fresh buying opportunity on Bajaj Finance?
Actually, Bajaj Finance has got stuck in a range from last couple of weeks, especially when Nifty rallied by 1,500 points. This stock was not comparatively performing and supporting. But the good part is now some sort of buying is visible at lower zone. Recently, it has taken multiple base near 6950 to 7100 zone. And because of that, some sort of swing could be there. Technically, it is forming a rounding pattern and respecting well to its rising trend line. So because of that, you can see a swing to our 7950 to 8000 kind of level. So can play the same with support of 7450 marks in Bajaj Finance.
Okay. Apart from that, Chandan, any top recommendation from you? Of course, you've given Canara Bank as your preferred bet, but anything else that looks interesting at this point of time?
Yeah, so I talked about Canara Bank. We are positive on CPSC and especially the PSU name. So one need to focus on few stocks from this category. And apart from that, we believe consumption could be the one sector, whether you talk about UBL or any other name. So here we are recommending to buy on UBL. The stock has been making high top, high bottom formation. Decent breakout is clearly visible on the daily, weekly, and the monthly chart. If I look at the previous hurdle, that was near 1800 zone, 1810 zone, that decisively is just breaking out. So with support of 1835, one can look towards 1914 UBL. So apart from Canara Bank, one can focus on the counter like UBL and positive on the selective pharma name. We can talk about Cipla or Glenmark. These stocks are likely to do well. So if I talk about Glenmark, one can buy with support of 895. The stock has potential to rally towards 940.
Vodafone is another one that I'd want to talk about. Of course, there have been updates which have come through for the month of October, but we've seen significant losses perhaps coming in. But do bear in mind the fact that it's over 100% rally for a year for Vodafone. Chandan, come in on this one, please.
Yeah, so talking about Idea, we have seen a good rollover in last two series. And because of that, we are slightly turning positive. And apart from that, the good part is stock is holding well with its 50-day exponential moving average. We have seen decent surge at the beginning of this year, and after that, some sort of consolidation is visible. But setup is positive. We believe with support of 14.5, this stock has potential to move towards 18.5 to 20 months.
All right, Chandan, stay on with us. I'm just going to address the other stocks and news before we navigate our conversation to more of the fundamental side. Ujjivan Small Finance Pack, that's the one that I want to talk about. Of course, I'm talking about the Q3 updates. We've already addressed in Bajaj Finance, which is also one of the top gainers. The numbers have been rather encouraging for Q3, and it is a strong set of numbers that we're looking at. Ujjivan, well, there also, total deposits are up by 29%. The CASA is inched up by 24% year-on-year basis. Disbursements remain up at 17%, and the deposit is up by 3% sequentially. IndusInd Bank, another one where the deposits have inched up by 3% sequentially, not YOY, and the advances are also up by 4%. Those are the ones that essentially need to be in focus. Telecom updates, we've spoken about Vodafone, Reliance Jio, where there has been some addition to an extent of 31.6 lakhs, but still lower as compared to the previous month. When it just comes to the addition number, the company overall has 39% or thereabouts 40% share overall in the wireless subscription business, and Bharti Airtel has added in 3.5 lakhs, and overall market share is 33%. The company added in 13.2 lakh users in the previous month, so there is a slow momentum building in even for Bharti Airtel right now, apart from Vodafone Idea, where of course the losses continue. It's lost in 20.04 lakhs as compared to what they recorded in October 2023. Well, this compares to a loss of 7.5 lakh users in September. So that's the number which is shrinking even for that one. Torrent Power, where the company has signed in 4 MOUs with Gujarat government, and the investment is to an extent of 47,350 crore in renewable energy, green hydrogen and power distribution business. Chandan, Torrent Power, do you kind of, it's a 7% uptick there. What do you make out of this? Would you suggest a buy at these levels for Torrent Pharma?
Yeah, so looking at Torrent Pharma, the stock is continuously making high tops, high bottom on the daily, weekly and monthly chart. Trend is positive. Even if you talk about Torrent Power, the stock is completing its rounding formations. So I believe positive move could continue. Most of the power stocks are doing well in the market. So with support of 995, you can at least see 1050 kind of levels in torrent power.
All right, torrent power, I stand corrected there, Chandan. It's a 7.5% kind of uptick that we've seen. But Chandan, I'm just going to leave it there. And thank you so much for taking out the time and joining us. All right, a big brokerage call of the day is JP Morgan upgrade on Tata Motors to overweight rating. The target has been revised to 925. And this upgrade is driven by better JLR margins along with the balance sheet deleveraging plan which has come through. Overall, JP Morgan has also spoken about IT. Just at the start of the conversation, I updated that, the brokerage is turned in neutral on the sector. It's upgraded Infosys and L&T Tech to overweight. Apart from that, there is also an upgrade which is coming on TCS, HCL Tech, Emphasis and Persistent to neutral from underweight. This is essentially driven by the cost saving measures which have been implemented by the companies. And of course, the near-term Gen AI preparation work also seems to be intact for these companies per se. But that's the limited point that we have in terms of the stocks and news. There is enough and more ground that needs to be covered in terms of the fundamental story of the entire equity markets right now. And to take the discussion forward, we've been joined by Sandip Agarwal, who's the fund manager at Sowilo Investment Managers. Morning there, Sandip.
Hi, good morning, and thanks for having me on the show.
Pleasure is all ours. I'm going to start off by asking you about what do you make out of the current Q3 updates that we've seen for Bajaj Finance, where the momentum seems to be strong even for Q3. And of course, there have been updates which have come through by Ujjivan Small Finance Bank and IndusInd, which seem to be a pretty decent show. What do you expect the Q3 numbers to look like for the entire financial sector, banking, as well as for Bajaj Finance too?
Yeah, so, surprisingly, I think there was a perception after some of the actions which were taken by RBI that, there will be some mute quarter and there will be some pressure which will be seen in the current quarter. But, the way the numbers update, as you rightly mentioned, have come from Bajaj Finance, IndusInd and Ujjivan. They all suggest that, on almost all the parameters, they have done quite well, whether it is loan book growth, whether it is AUM growth, or whether it is, the number of customer additions. And I think, it clearly reflects that when your economy is doing well, then these are quasi-economy proxies only, and they has to do well. And more than that, with consumer confidence coming back and the festive season behind, you will also see some reflection of that in some of these numbers. So I would put it this way that, because we are a consumer-driven economy and also, we are not in the kind of stress which the world is seeing from the financial side also, I think we're in very good shape and we will see more momentum going forward. So I think that these numbers are quite good, very strong, and I don't foresee a big stress in the PFSI space or the NBFC space or even the gold loan finance in the upcoming months as well.
Okay, do you expect a rather strong show coming in from the entire banking sector in this quarter? That at least that's what the expectations are. If you look at by the end of the month, we will also have banking numbers trickling in. Any particular bank that you'd be looking at? HDFC Bank has seen some major run-up ahead of the earnings, particularly private sector bank within PSU also. What looks interesting at this given point of time, at least from the earnings perspective?
So, if you compare, see, we don't have the delta which we had in the last year because, we were coming, we have recovered very sharply on the NPAs, and because of that, profits were showing multifold growth. But now some of those numbers have started coming into base. Having said so, I think, the delinquencies will even surprise positively. I don't believe that, don't expect that, there will be higher delinquency. There will be positive surprise from delinquencies, and even the deposits and the loan growth should be decent. So I believe that, the momentum or from the number perspective, I think the banks will continue to do well, even both private and public sector banks. Also, I would like to, add a small comment here that while, in last 3-4 years, you would not have seen much performance from HDFC Bank and Kotak Bank. But if you see their profits, they have definitely gone up. So what we have witnessed in last 3-4 years is sharp time correction. which has happened. And now I think, this large private banks which have been underperforming, there is a very, very fair chance that they should, do well from here onwards. Because two things: one, our economy is doing very well, and second, these banks have gone through the time correction and the multiple correction or valuation correction, and they have now come in the comfort zone. And when FIs and the way the SIPs are happening and the way FIs are started coming in, these large institutions will be the first one which will be chased. So I think we will have some good returns on all the large names.
When you say there is a sharp time correction and value correction which is played out for private sector banks, sure, the delta wouldn't be there, but given the kind of discount that these private sector banks are enjoying within the space in the pecking order, what do you like?
We have a PMS and we hold stocks in client and our portfolio, so very difficult to comment. But I would put it like this: that the underperformed bank which have not performed in last 3-4 years despite having a great franchisee, I think those are the ones which should do better now, and they should start performing in terms of stock price appreciation. Their business model is any which way good. There is no problem there.
Okay, so between HDFC Bank and ICICI Bank, what do you like?
I think HDFC Bank has value comfort.
Okay, so that's the answer out there. HDFC Bank is what we are looking at, but Geo Financial Services, there's a joint venture, beg your pardon, which has been formed between Geo Financial Services and BlackRock, which together have applied for mutual fund license with the market regulator. How do you see that development, A, for the entire space, and B, for Geo Financial Services? Do you see a major uptick coming in with this kind of joint venture with BlackRock?
So, let me put it this way, that one, again, these are all factors of whenever, economic cycle starts and with the political stability and everything around suitable, then, we see many small companies and mid-sized companies becoming large size. And right now, the way numbers have come for Bajaj Finance and other small banks and the NBFCs, and the way even banks would report, in my view, we have huge scope for growth for everyone. And Geo has an advantage that, they have all the data which they have accumulated in last several years, because finally, in the digital world, data is everything. So I think they definitely have an advantage from data perspective and knowing more information, having more information about the customer. So a suitable tie-up and a good execution is what is required. And if that happens, then I think there is substantial upside in all these strong promoter-backed entities.
All right, so 1.5% uptick there. Do bear in mind the fact. Actually, I'd want to come and confirm it with you, Sandip. BlackRock was earlier with DSP, right?
Right.
So did we see a good amount of momentum coming in for DSP as well when the joint venture essentially kicked in? Do you think there is going to be a sense of market erosion per se which will take place?
It is very hard to comment. Let me put it this way, that, times are different. And as I said that, right now the market is huge and a very good thing is that, whole world is looking at India as the only investment destination. And even, the retail investors who used to get panicked earlier very quickly, they have also started understanding that, these are businesses which we are owning for long term. So they continue their investment. So I think, because of all these factors, the size of the pie will keep on growing. And I really don't see big losers here. I believe that, the market has become so big, and in coming years, it will be even better with economy growing. So there will be space and good space for everyone. I will put it that way.
All right. A final question that I have in my mind relates to IT sector, of course. IT sector, we've seen some upgrades finally coming through for Infosys, LTI, Mindtree, and the likes. How are you viewing this space? Do you think we've hit the bottom and there is recovery which is only supposed to take place? Is that a level of defense names per se that we are now hiding in, expecting some amount of correction in the markets?
So, tech sector generally, there are two types of bottom which is there. One is obviously the stock price bottom. I think that bottom always happens when hikes are on hold, and when bonuses are not paid out, variable pays are stopped, and you start seeing negative employee addition. I think that period has been around August, September, when all those things came together. And I think that is the time when the stocks have in general made a bottom in terms of stock price. Now, performance basically, which has two parts, revenue and margins. I think margins have made bottom 3 quarters back when, attrition started stabilizing. So from there, we have seen that, margins have been positively surprising. And from here on, you will see sharp recovery in margins because, from 28% attrition for TCS, if it comes down to 11-12%, we are talking about 16% dip in attrition, and broad calculation suggests that 1% dip in attrition is around 25-30 basis point margin accretion. So basically we are talking about 3-4% kind of margin accretion in a large cap like TCS. So obviously there'll be a sharp recovery in margins from here on. But if you talk about revenue growth, I think revenue growth still will take 1 or 2 more quarters before it bounces back. So I will put it this way that in beginning of 22, when all the stocks were at peak and they started falling, and all managements were also guiding for very strong growth and everything, but they were falling because attrition started jumping like anything, and because of that margin started falling very sharply. Now is the time when margins are seeing recovery, growth is not showing up, but 2-3 quarters sharp recovery in margins followed by growth is what will lead to further upside in the sector from here on. So I think if anyone is expecting that there will be sharp recovery in growth from here on, I think we are still 2 quarters away from that scenario. But sharp recovery in profit growth and margin is something which we will see from this quarter, because we have seen attrition stabilizing in last 2 quarters. So I think the sector has made a stock price bottom 3-4 months back, but from here also, I think you will see good 10-15% upside is what the index should show, IT index should show.
Sandip, last question that I have in mind actually, there is this whole focus is now around that Gujarat, Vibrant Gujarat Global Summit. Of course, there are enough and more MOUs which are signed ahead of it. 23 lakh crore was signed in the last 2 years. And of course, there are much of hopes at least pinned from these agreements coming through. Whether or not and when they are going to be executed, that is something that we'll discuss for another day. But in terms of the sectors per se that you think will be in focus on back of this development.
So I think, infrastructure, if you see, yesterday was, I think, day 1, and almost 7 lakh crore MOUs were signed by different companies, which included Torrent Power, which included so many other companies, including Tata and others. So I think, if you see the investments which are coming up, they are mostly in the infrastructure side and capacity building. So it also is a sign that, private capex, at least the commitments are coming very strongly. So we will see very strong private capex in next couple of years to start. So I think, it is a good sign. And I think always the more focus is always on the infrastructure side. Most of the MOUs are signed on the infrastructure side and on the capacity building side. And that is what we have seen on day 1 also.
All right. We're just going to leave it at that. Thank you so much for taking out the time and having this conversation with us.
Thank you. Thank you. Thank you so much.
All right, a quick update there. Top 6 sectors in investment pledge in the whole Vibrant Gujarat theme includes power, oil and gas, that's number 1. Chemical, fertilizers and GIDC projects, that's number 2. Engineering, auto and other industries, that's 3. IT is at 4. 5th is urban development, and 6th, the focus is MSME. So these are broad-based sectors or themes that you'd like to watch out for. But with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us in the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Money Control app.